Here are the steps you need to follow. The first thing is you need to have reliable income. See, the whole thing is if you're trying to qualify for any credit card you lay your eyes on, you got to have reliable income. I mean, that's what the credit card issuer cares about first. Why do they care about income? Because income means that you will be in a position where you can repay whatever balance you have on the card. So to qualify for a credit card, you need to have income on your own. And the thing is, when we talk about income, I'm not speaking about a 9 to 5 job. Don't confuse employment with income, right? So really, the thing is, you can have passive income. You can stay at home chilling and deriving income, deriving revenue every month. So you need to have income of your own, or at least have reasonable access to any household income. So reasonable access can include deposits into a shared account or regular transfers from the wage earner's account to your account. That means what? That means that if you don't have a job yourself, let's say you are jobless right now, but your spouse is working, or you have your dad, your mom, or an aunt or an uncle, somebody's working in the household, and you have access to that income, and they have given you access to that income, you can actually use that income. You can list that income on a credit card application. Okay, this is really important. And one thing I want to say here is that when we talk about income, we're speaking first and foremost about money, liquidity. So if you're asking Chase to give you a credit limit of $10,000, do you have enough money to repay whatever you charge on the card? That's the question that Chase is going to ask you. Same thing for Bank of America or another bank or another credit union. So they have to think about whether or not you have enough money. Do you earn enough money? Income is not part of your credit reports, so issuers ask about it separately on the application. And some lenders or credit card issuers might further use statistical models that actually estimate your income based on what else you know about. Okay, what else they know about you, by the way. So what I'm trying to say here is that what they're gonna look at your situation, where you live. They're gonna look at your education, your bio in some cases. And they'll look at your demographics, your age, to see what kind of income you can derive. Because when you think about the zip code, they will know whether or not, based on that zip code, you actually meet the minimum income or assets that people have in that zip code. They also look at your income ratios. So they'll look at your debt to income ratio. So that's like your income relative to your debt. So my point here is that you got to have reliable income. That's the first thing you need to have. And the lender is going to make sure that you actually have reliable, decent, legit income before qualifying you for a credit card. So that's the first thing. Having reliable income is the first thing. Second thing is you got to apply for the right card. By the way, welcome back to the channel. I'm very happy to have you here. We're having a nice conversation about how to always qualify for any credit card you lay your eyes on. So step number 1, you want to have reliable income. Step number 2, you want to apply for the right credit card. When I'm talking about the right credit card, I'm not saying that there are credit cards that are wrong for you, boss. But the thing is, as with everything in life, sometimes you try things, they don't work at first, or sometimes they never work. And sometimes you try something and just works the first time around. People talk about chemistry, people talk about love, people talk about randomness, whatever. But when we talk about credit, credit is a game. There is no randomness in credit. There is no I'm lucky, whatever. No. If you want to apply for a credit card and always qualify, you have to actually apply logic. You got to have a plan. Okay, so apply for the right credit card. So you want to apply for the card that is right for you. And when I'm talking about right for you, I'm talking about maybe, for example, you have a relationship with your bank or credit union, then you already have a good relationship. You have a solid foundation, so you can parlay that solid foundation into something even better when it comes to having a credit card. That's what I'm talking about when I mean applying for the right credit card. So when we talk about the right credit card, you got to think about the type of issuer. So is this issuer right for you? Do you have a relationship with this bank? Do you have a relationship with this credit union? How long has that relationship been maintained? So those are elements you got to think about, right? So that you're not doing anything random, because the thing is, the last thing you want is to actually do things randomly. You don't want to do anything randomly. No. Apply logic, boss. Okay. So the type of issuer, that's the first thing, that's the first criterion you need to look at when determining whether or not you are applying for the right card. The second criterion is the type of credit card itself. See, when we talk about credit cards, you have a constellation of credit cards. You have secure cards. You have cards that are designed for people with bad credit. In other words, cards that appeal to folks with FICO scores of 629 or lower. You have student credit cards. You have unsecured credit cards for the general public. So in which category do you fit in, boss? Talk to me about that. If you basically want to always qualify for any credit card you apply for, make sure you don't have a lot of debt. By the way, I just want to quickly remind you of today's topic. It's a wonderful conversation I'm having with you about how to always qualify for any credit card that you apply for, right? So do not have a lot of debt, because see, debt is quintessential. Debt analysis is quintessential when it comes to the issuer approving you for any credit card. And that actually creeps into your credit card application at three levels. You have your DTI, your debt to income ratio, your CUR, your credit utilization ratio, and the third one is your credit score in general. So don't have a lot of debt. So credit card issuers, the thing is, credit card issuers, they will just, hey, listen, they will consider the amount of your credit card balances and loans before they approve your application. Why? Because they're looking at your DTI. They're looking at your debt to income ratio. Yeah, because the thing is, if they're thinking that you are making, let's say you're making 50 grand a year, you're making 60 grand a year, and you have like 20 grand already in loans, in the open loans, they're thinking, wow, that's a lot of cash that goes out to those loan payments. How much money will this guy or this girl have for me to repay whatever they charge on my credit card? So that's why the lender, the issuer for that matter, they're constantly looking at your DTI. And experts and our team also have said on multiple occasions on this show that you want to always be around 30%. You want to, I mean, if you go around 35%, that's fine. Not a big deal. Don't try to don't be too religious about it, okay? Do your best. Do your best to always be around 1/3, okay? And so that's number one. You also have your CUR, your credit utilization ratio. Same thing, credit utilization ratio. Make sure that you are around 30% or 35% maximum. And the third thing is your credit score in general. Now, the correlation that I want to draw between your credit score and the fact that you should not have a lot of debt is that, see, when you have your credit score, you have your payment history that accounts for 35% of your FICO score, right? And you also have your CUR, your credit utilization ratio, that accounts for 30%. So those two elements combined accounts for nearly 2/3 of your FICO score. This is where having a lot of debts impacts your ability to qualify for any credit card you apply for. The next thing I want you to do here is to keep a positive credit history if possible. This is important. So when we talk about having a positive credit history, you don't get to that level in one day. It is constant work. See, when we talk about keeping a positive credit history, there are two things I want you to do right now. So the first thing, you want to, you got to have a system in place where you constantly monitor your credit score and credit report. That's the first thing you got to do. Second thing is you need to have another plan to fight or dispute whatever inaccuracies, whatever errors you catch on the credit report. And the third thing is you need to have what we call best practices. In other words, things you should do to actually increase your credit score. Now, when I'm talking about plan, don't think like you need to have like a big plan, whatever, like a big blueprint for your financial future. It ain't really complicated. It's not really that complicated. It just takes reminders, in your phone. You want to have automatic reminders. You want to have a system in place where you know things you have to do, and this takes about 5, 10 minutes, 15 minutes maximum. For example, checking your credit score takes about 5, 10 minutes. Okay, so you have a lot of free credit score providers. You have Credit Karma, you have NerdWallet, you have Wallet Hub, you have and also your current credit card issuer probably has a system in place where they can actually provide a free credit score, your credit score for free. And you want to look at your credit card statements that you receive every month. Somewhere on the first page, you should see your credit score. You can also log online. Okay, all the big players provide credit scores for free, from Chase to American Express to Navy Fed to Wells Fargo. Nearly everybody provides that service for free. So you need to have a plan to actually check your credit score for free. Second thing is you got to have a plan to actually make sure that you have to go granular now. Now this might take a little bit longer, like 30 minutes. So you want to go granular. You want to really comb through your credit report to see if there are errors, right? So if there's something creepy, something that you don't recognize, somebody charging something that you don't know, like you live in Philly and you see somebody charging something on your card, and in I don't know, in LA or Chicago, whatever, and you realize, hey, listen, this charge, I don't recognize it on my credit card statements, and now it's creeping into my my credit report. You want to fight it automatically. And the third thing is, as I said, put in place a system whereby you are constantly trying to monitor, but also improve your credit score, increase it. And another thing you can do if you are trying to get a credit card that you apply for is to get a cosigner. Yeah. By the way, I just want to quickly remind you that I'm still having a conversation with you about how to qualify for any credit card you lay your eyes on. And getting a cosigner should not be really complicated. I mean, when it comes to credit card, getting a cosigner is a little delicate. In other words, they would rather, credit card issuers would rather give you a card with you and your spouse. Okay, they don't give cards, so like you can't say, well, you're my friend, so I want you to have to actually get this credit card with me, to co-sign this credit card with me, or to co-use this credit card with me. It doesn't work that way. It's a little different when it comes to lines of credit and credit cards. For loans, not a problem. For personal loans, not a problem. Personal loans, the bank or credit union or online lender for that matter, they will accept that you have somebody else that you have no relationship with to actually come and co-sign the loan for you. But credit card, they're a little different. They're a little methodical. So if you have a spouse or you have a family member with whom you have a close relationship, and that person happens to have a higher credit score or a better situation with you when it comes to credit worthiness, you might want to try to actually get a credit card with that person. Okay. And so if you can't qualify for a credit card on your own because you're not old enough, you don't have sufficient income, or you have bad credit, you can ask a friend or a family member to co-sign your application. The co-signer has to meet the credit card's qualifications for both of you to be approved. So when you ask someone to help you get a credit card, that person is taking a big risk by co-signing for you. Now, if you don't pay the balance back, the co-signer will be responsible for the balance and will receive any credit damage from payments you have missed on the accounts. Okay, so this is important. Now, I want to say something that is ancillary, that is related to this. This is the concept of authorized user. So being added as an authorized user on an existing account is really an alternative that can help you boost your credit score. Okay, if your score is not enough to qualify, to actually help you qualify on your own. But don't forget that there are differences between an authorized user and a co-signer. Very, very important. Another thing you can do here is to save up a security deposit. Now, what is a security deposit? Well, it is what it is. The thing is, it depends on your situation too, though. Let's say you have bad credit, or you are new to credit in general, and you have tried everything. You have tried to get a credit card, and you cannot get approved for a regular credit card. Well, what you can do here is that you may have more luck with a secure credit card. And basically what happens here is that this card requires you to make a security deposit against your credit. Okay, so you just make a security deposits against your credit limits before you can be approved. For example, let's say you are trying to get a 1,000 credit limits on a credit card, go to your bank. And what will happen is that the loan rep or the credit card rep will open an account. It's a particular savings account. It's a unique savings account. What they do is they will set it up in such a way that you can deposit the $1,000 in that account, and they will link that account to your card. They will take the cash in that account to actually issue you the limits on the card. It's really easy. Sometimes the bank or credit union will give you the full amount that you have deposited. Sometimes they will give you 95%. In other words, or 90%. So let's say you give them $1,000, right? And they will give you 900. They'll give you 900 limits on the credit card, because the banks want to have a little cushion of $100 or $50 or whatnot. This is important. And so after about a year of timely payments, you may qualify for an unsecured credit card, presuming no other negative information is added to your credit report. So many secured credit card issuers will accept a security deposits as low as $200. If you don't have that much, start setting aside $50 to $100 each month until you have a good security deposit saved up. So it's all about planning the whole thing. It's all about also choosing the right credit card issuer. Okay. And our advice, based on 40 years of research, is to always go where the lender, or you want to go where people already know you, right? So you want to choose the bank where you currently have an account. You want to choose the credit union where you currently have an account. It's always important to start where you have a relationship. I want to give you a bonus here. If you have made it so far, I really appreciate having you. And I want to give you a bonus. So make sure anytime, if you want to qualify for a credit card, any credit card for that matter, okay, make sure that you are old enough for that credit card. The thing is, the legal age to qualify for a credit card on your own is 18. That's the legal age across the states, across the United States. Doesn't matter which state you're in, 18, that's the bottom line. However, you will need to have a regular source of income before you can be approved for a credit card. So basically, if you're 18, 19, or 20, 21, doesn't matter, but if you have income, this is important. If you remember, I started today's conversation by saying that you need to have reliable income. Okay, income reliability is quite essential. The lender, I would say, in most cases, doesn't care about your age as long as you are of legal age. They care more about your ability to repay whatever you charge on the card. Okay, so the thing is that you need to make sure that you have income. Now, the income requirements do not require you to work full-time to get a credit card. You can put your annual earnings from your part-time campus job on your credit card application, and this will definitely work. If it's high enough to repay a credit card balance, the credit card issuer will consider you. And there are a lot of programs. A lot of credit card issuers have programs on campus, okay, where they actually reach out directly to students. And so you want to go for students' credit cards. Those are really, really helpful. And a lot of big banks have student credit cards. So they are customized. They are made specifically for cardholders in that category. So like, that you have folks between 18 and 22 or 23 and 25. That way you can increase your chances of getting a credit card that you need. And one thing I need to say here also is that if you don't have enough income, you will have to apply, okay, with someone who has enough income. In that case, what you have here is that you have to apply for a joint credit card with you, okay? And if you are young, you not only need to meet the income requirements, but also the credit score requirements. So right now, if you're listening to me and you're not of the age or ready to apply for a credit card on your own, make sure that somebody adds you as an authorized user so you can build credit history gradually but steadily. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how to qualify for a credit card, for any credit card for that matter. And So have reliable income, apply for the right card, do not have a lot of debts, keep a positive credit history if possible, got a cosigner, save up a security deposits. Very important. Thank you so much. I will see you next time. Until then, remember, stay marvelous.